Hello traders, today is the 4th of July, which means that the US is out celebrating Independence Day and the markets are quiet. In the UK, investors are focused on the elections outcome, which should be released in the early hours of Friday. And ahead of it, you can see that the UK index managed to hold its own above this key support area at around 8,120, this blue line here, which has been tested on a number of occasions. And the latest test came earlier this week, when the index was down for several sessions in a row before finding support on the back of that level and on the broken trend line of this bull flag pattern. Today the FTSE has broken the short-term resistance level at around 8,235 with a more significant support coming in at around 8,300, which has been an important area in the FTSE in the last several weeks. So a clean move above that could potentially pave the way for a move towards the all-time high that was hit in May at 8,480. In terms of support levels to watch, 8,195-ish, this level here was the high from the previous day, which needs to be defended in the next couple of days if the bullish trend is to be maintained. But the key support area is right here. So I wouldn't rule out the possibility of another dip into the zone, but that's not the base case scenario for me. There's also the second round of elections in France taking place this Sunday, which puts the French CAC index into sharp focus. And this index has found some support at around 7,470 area, this blue line here, which was the base of the breakout earlier this year. And we have tested this level on a number of occasions now. So far, it's holding firm. In terms of resistance levels to watch, I think this level right here at 7,715-ish marks an important area in this market. And should we rise above that following Sunday's elections, then I think that would trigger a short squeeze rally, potentially towards 8,000 initially, ahead of the all-time highs that were hit earlier this year. So just keep an eye on this market because there is a potential for a gap as well, depending on the outcome of the French elections on Sunday. Along with the other European indices, the German DAX index has also bounced back strongly in the last couple of days, breaking in the process this bearish trend line that has been in place since the market made a record high back in May. But this was the level of support I was monitoring at around 18,050, which was tested on a number of occasions without any significant downside follow through. So the fact that this level is held, you can see that there's a triangle pattern forming here. And now that we're breaking above it, this is potentially a bullish signal that suggests that the German index could be on the way to a new record of around 19,000. So watch out for today's close. But more importantly, it's how the markets will open and react to the French elections on Monday morning. For FX investors, the focus is turning to the US jobs report, which is due for release on Friday. And ahead of it, we've seen the US dollar weaken quite significantly against some currency pairs because of weakness in pre-NFP leading indicators. And as well as that, we've seen the likes of the ISM PMIs, both the manufacturing and services sector, disappointing expectations, along with several other data releases this week. And as a result, we've seen the likes of the Aussie dollar break out. Now remember, the Aussie was already supported in this consolidation because of the fact that we had stronger than expected inflation data from Australia, and the minutes of the RBA meeting were deemed to be a little bit more on the hawkish side. So already supported by those factors, the weakness in US data helped to trigger a breakout in the Aussie dollar, and rates have now broken above this bearish trend line of this triangle pattern and resistance around this shaded area. So this is clearly a bullish signal, and unless we see a significantly strong jobs report from the US on Friday to trigger a sharp dollar rally, we could well see the Aussie climb towards the 69 level, which is where it had previously struggled. So the path of least resistance clearly to the upside on this currency pair. In the commodities space, gold has broken out of this bull flag pattern, and it has taken out resistance around this area of 2,335-ish. This is now going to be an important support zone to watch on Friday when the jobs report is released. Resistance at 2,365, this red line here, needs to break to trigger a fresh wave of buying above that level, and potentially that could paved the way for a move towards a new record high above 2,450 that was hit in May. Key support is this shaded green area, which is also the neckline of a head and shoulders pattern, which if we break below that, could trigger some downside follow through initially towards the 2,222 level, which marks this high here that was hit in March. But that's not my base case scenario, given the fact that we've broken out of this bull flag pattern to the upside. Silver has reclaimed this bullish trend line after a brief break below it, and it has now broken above the bull flag resistance level and climbed above the key $30 level. So the technical outlook on silver remains bullish, and I think if we see any dips back into this shaded region of around $29.50 to $30 area, that could be defended on Friday. We do need to see a higher high. The most recent high comes in at 30.85, this black line right here. And if we were to break above that, I think that would provide the clearest signal yet that the bullish trend has resumed. Now, for more analysis and market insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.